Welcome to the deep dive. Today, we're looking at something pretty unusual in the stock market. How one company's deal with the government actually ended up boosting its main competitor.
Yeah, it's a fascinating dynamic.
We're diving into AstraZeneca, ticker AZN. Their stock jumped, more than 10% recently? Now, part of that was good news, right? Positive results for Enhertu, their breast cancer treatment.
Absolutely, that definitely helped. And HER2 treating HER2 positive early breast cancer, that's significant clinical news, no doubt, gave it a lift.
But not the whole story.
Not the whole 10% plus story, no.
Right.
What really seemed to amplify things, the big push, actually came from somewhere else. It was a major announcement from Pfizer, their competitor. Financial regulatory news.
Okay, so not about drug results competing head-to-head.
No, this was about something broader. It was about sort of regulatory risk just evaporating. For Pfizer, yes, but the market read it as applying more widely.
Interesting. Sounds like a mix of strategy, politics, and market psychology all rolled into one. So let's unpack this. Our mission today is to really get into the details of that Pfizer tariff deal this was with the Trump administration, right?
That's correct.
And figure out why the market saw that deal, which was meant for Pfizer, and decided it was great news for AstraZeneca too. Let's start with the Pfizer deal itself.
Okay, so first, you have to remember the context. These potential tariffs on pharmaceuticals coming into the U.S., that was a huge dark cloud.
Right. Uncertainty is never good for stocks.
Exactly. These companies have incredibly complex global supply chains. Slapping a big tariff on imports isn't just a cost increase, it's unpredictable. It messes with margins, planning, everything. That uncertainty alone was, probably weighing on valuations across the board.
Makes sense. High stakes. So Pfizer's CEO, Albert Bourla, meets with President Trump. They announced this deal. What did Pfizer actually promise to do?
They laid out three main commitments. Big ones. First, the one that got a lot of headlines. They promised to cut prices significantly on many of their prescription drugs here in the U.S.
Okay, price cuts. That's politically popular.
Very. Second, and this is the really big number, they committed a massive $70 billion investment to expand their operations domestically within the U.S.
$70 billion. With a B.
$70 billion, yeah. This wasn't just, keeping the lights on. This was a major strategic investment in U.S. facilities, manufacturing, R&D, the works.
That is staggering. I mean, $70 billion, is that buying goodwill, or is it a fundamental shift in their strategy anyway, just framed conveniently?
Probably a bit of both,
That's
right? It's definitely a huge long-term bet on the U.S. But it also directly addressed the administration's focus on bringing investment and manufacturing back onshore. And the third piece was participation. They agreed to be part of this new TrumperX website.
Ah, the site to help people find drug discounts.
That's the one. So price cuts, a massive domestic investment pledge, and supporting that specific government initiative.
So that's Pfizer's side, a huge financial commitment. What did they get back immediately? What was the prize?
Certainty and time. The crucial benefit was a 3-year grace period. For 3 years, Pfizer would be exempt from those threatened Trump administration tariffs on pharma imports.
3 years? That's significant breathing room.
It really is. It basically removed that big cloud of tariff uncertainty specifically for Pfizer. They could now plan that $70 billion expansion knowing their existing import flows wouldn't suddenly get hit with huge, unexpected costs.
Okay, so Pfizer secures its own stability. Now the ripple effect. How does this specific Pfizer deal suddenly make AstraZeneca look better? That's the key question here.
Right, and there seem to be two main reasons the market connected those dots so quickly.
Okay.
First one, presidential signaling. When the deal was announced, President Trump didn't just talk about Pfizer. He hinted pretty strongly that this model, you invest big in the U.S., you get trade stability, could be replicated.
Ah, so others can play this game too.
Essentially, yes. If this partnership works, maybe we do more like it. The market hears that and immediately starts looking around. Who else fits the bill? Who's next?
And AstraZeneca is a big player.
A very big player. Fourth largest pharma company by market cap globally. Something like, $259 billion? If the administration wants another big win, another company pledging major U.S. investment, AZN is an obvious candidate. They're the right size, right profile.
That makes sense from a political viewpoint. Big company, big impact. But you said 2 reasons. What's the second one?
The second one is even stronger, I think. It's because AstraZeneca wasn't just sitting back waiting. They were already making moves that fit this exact pattern.
They were already investing in the U.S.?
Massively. Their CEO, Pascal Soriot, had actually highlighted this not long before in a company update. AZN had already publicly pledged its own huge investment in the U.S.
How much were they talking?
$50 billion. $50 billion to keep growing their U.S. footprint.
50 billion. Okay, less than Pfizer's 70, but still, that's an enormous commitment. Was it specific, like real projects?
Yes, very specific. The source material mentions it includes the single largest manufacturing investment in AstraZeneca's entire history, and that plant is planned for Virginia.
Wow. So not just vague promises, bricks and mortar, jobs.
Exactly.
Hmm.
Tangible commitment to domestic manufacturing, physical assets in the U.S.
Okay, let me see if I've got this straight. Pfizer
Okay.
proves the model, invest billions domestically, get tariff relief. Then the president hints more deals like this could happen.
Right.
And just coincidentally, or maybe strategically, AstraZeneca has already announced a $50 billion U.S. investment plan, including its biggest ever manufacturing site here.
You've got it. It lines up perfectly.
So the market looks at this and thinks, well, AZN has already put its money on the table. They've done what Pfizer did, essentially. They're almost certain to get the same deal.
That's the interpretation, yes. It suddenly made the odds of AZN also getting a tariff exemption look very, very high. It wasn't speculation anymore. It felt like a logical next step. That Pfizer deal just confirmed the pathway. Big U.S. investment equals tariff stability, at least for now.
Yeah.
And AZN was already well down that path.
And that's what removed the uncertainty for AZN.
And that seems to be the catalyst, the removal of that specific regulatory overhang. And the stock reacted almost instantly.
Okay, so if we sort of set aside that regulatory win for a moment, how did AZN look fundamentally before all this? Was it a stock that needed saving, or was it already doing well?
He was already pretty healthy, actually,
Ah.
which is probably why the relief rally was so strong. The company was already delivering solid earnings growth, consistent performance.
And valuation, pharma can get expensive.
It was reasonably priced. The forward price-to-earnings ratio was hovering around 15,
Yeah.
which for a major pharma company with growth potential isn't crazy high. It suggests the market wasn't, baking in overly heroic assumptions before this news hit.
15 is pretty reasonable, yeah. Suggests maybe that tariff risk was holding it back somewhat. What about the underlying business? Margins, pipeline.
That's where it looks really strong. Their gross margin is incredibly high, 72.56%.
72%, that's huge.
It's exceptional.
Yeah.
And that kind of margin gives you resilience, right? It means you have pricing power, you manage costs well, and you can absorb shocks like R&D setbacks or supply chain issues much better than companies with thin margins.
Okay, strong margins. And the pipeline, you mentioned in HER2 earlier.
Yeah, and HER2 was big news. But the pipeline looks robust more broadly, too.
Mm.
The sources mentioned that in the months leading up to this, AZN had announced something like more than a dozen positive results from late-stage clinical studies.
Across different areas.
Yeah, there's multiple therapeutic areas. So it's not just one potential blockbuster carrying the company. It suggests a pretty deep bench of potential future revenue drivers, sustained innovation.
So putting it together, a fundamentally strong company with good margins, reasonable valuation, and a healthy pipeline was being held back primarily by this big, scary tariff uncertainty.
That seems to be the case.
And when the Pfizer deal provided a clear path to removing that uncertainty for companies willing to invest heavily in the U.S.,
And AZN had already shown its willingness with that $50 billion pledge.
the market just, boom, repriced the stock based on those strong fundamentals, now without the regulatory discount.
That's a great way to put it. The market could suddenly focus on that impressive 72% gross margin, the solid dividend yield, 1.87%, and the pipeline, knowing the biggest external risk seemed to be off the table for the foreseeable future.
It moved from being maybe a pretty good stock with a question mark to a much clearer growth story.
Precisely. The clarity was key.
Mm-hmm.
Investors could finally price in the underlying strength with more confidence.
Okay, let's try to summarize the main takeaway here from our deep dive. AstraZeneca's stock surge wasn't just about good drug results.
No, that was part of it, but not the main driver of that big jump.
The real story is this dual track. Yes, keep innovating clinically, like with NR2, but also strategically align your corporate investment with national trade policy. That massive $50 billion U.S. investment pledge positioned them perfectly to benefit when Pfizer clarified the rules of the game for tariff exemptions.
That's it. Clinical success plus savvy strategic investment in the current political climate. It's a powerful combination.
So for you listening, what's the broader lesson here, beyond just AZN stock?
Well, I think it shows pretty clearly how these huge corporate investment commitments, we're talking tens of billions of dollars, are now functioning almost like diplomatic tools, Pledging $50 billion, $70 billion for domestic operations isn't just business strategy anymore. It's become a way to negotiate favorable trade conditions and buy regulatory stability, especially in sensitive sectors like pharma.
It essentially insulates these giants from tariff risks, at least temporarily.
Seems that way, yes.
Which leads to a really interesting, maybe provocative final thought. Considering the price tags here, Pfizer's $70 billion, AstraZeneca's $50 billion just to get 3 years of tariff certainty, does the market now see massive domestic investment not just as a nice-to-have or a competitive edge, but as a requirement for Big Pharma to operate smoothly in the U.S.?
This is becoming table stakes.
Exactly. Is the cost of entry or the cost of avoiding major trade disruption now measured in these mega-billion-dollar U.S. investment pledges? Something definitely worth watching as global trade dynamics continue to shift.